Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense to you. We've got tools in that regard built into our web trader and our app that makes the risk management side of things quite a bit easier, and we'll go through some examples maybe in the order window with how those tools help calculate your exposure and potential profit, etc. And also keep in mind that what we cover is not meant to be financial advisement within the webinars, but is coming from an educational perspective. Now, from our main website, if we log in the upper right corner, we'll be in our web trader platform, which allows you to trade on MT4 and MT5 accounts from one location. Also, our app works the same way, and you can find our app in the major app stores. And also there are links to those app stores here on our website to get to the download for our mobile app. And what you'll find is our mobile app has the same trading tools, the free signals, the advanced economic calendar that we'll go over today, market buzz, etc. All of those tools are in the app as well as the web trader. Now, we'll go ahead and log in the upper right corner here and be in the web trader platform. And yesterday, since we're focusing on fundamental news, we should talk about a little bit about what happened yesterday. I think the bigger news was out of the US, as many times it typically is, being the largest economy in the world. The US had numbers that were somewhat disappointing yesterday in terms of the advanced data payroll, which is the advanced data that's trying to predict how the jobs numbers might come out tomorrow. When the actual jobs numbers come out for the non-farm payroll jobs report, which is reported once a month out of the US and is by largely deemed one of the most important economic announcements out of the US each month. So that's coming tomorrow, the non-farm payroll, and the advanced data yesterday on the jobs looks like the numbers were disappointing. It was worse than expected, or maybe I should say not as good as expected. And we'll see what those numbers look like tomorrow on the non-farm payroll. But what that did was create some sentiment yesterday that, hey, maybe things aren't so great with the US economy right now, especially when it comes to jobs. And why did the market rise then? Because the anticipation is for sure the US might go ahead and cut rates before the end of the year one more time. The US has basically alluded to the fact that they might cut the federal interest rate again here in December. And now with the data yesterday, and it wasn't just the advanced data and the jobs out of the US, also some manufacturing data, PMI data, there was a slew of data that came in a bit worse than expected out of the US. And the bizarro world that we're in right now, worse than expected numbers come in and the market cheers that and goes up. Largely related to the fact that because the economy is showing a slowdown in the US, then Wall Street and the stock markets around the world then anticipate, hey, the US is more likely to cut interest rates then. If the numbers were too good, then they'd be afraid to cut interest rates because they'd be afraid inflation would come roaring back. So that's kind of the situation coming from yesterday to today. There was positive sentiment yesterday, also coupled with the fact that there's still a ceasefire holding with Israel and Hezbollah in the Middle East. It talks about maybe a deal for hostages release with the negotiations between Israel and Hamas. And so all around, maybe some positive feel in terms of sentiment in both of those situations. Now we come into today and we take a look at the economic calendar, and we see there's more data coming in, and we'll focus on the US data because the early data already came in out of the European Union and the UK, and what we're looking at is what are the important announcements coming today and tomorrow out of the US on the economic calendar. And so what I want to do is show you how you can trade based on those announcements, and not by guessing what the numbers might be as they come before they come in, but trading on them after they come in based on the data that our economic calendar shows you from the past announcements. So if you're used to a standard economic calendar, we go a step further with our economic calendar to data crunch and help you understand what was the effect of these numbers in the past announcements. And so we go to our economic calendar, we'll pick today's date, you can change the month, year, and day if you want to analyze other days or other months. And then also you can pick which countries you want the announcements to come in for, what level announcements, low, medium, or high. The low level announcements tend not to move the charts much. And so the medium and high level we tend to focus on. And so a number of announcements already came in today. What we can do is take a look at what is upcoming. Okay, not long from now, we'll be looking at initial jobless claims in just a couple hours time coming out of the US, and that's rated as a high level announcement. So again, focus on jobs. Okay, yesterday was new job hiring, advanced data. Tomorrow will be new job hiring, actual data. Today, this is focusing on people who lost jobs, initial jobless claims. Okay, so the higher this number is, the worse the news is. Okay, these are jobless claims. So if this number comes in higher, that would be worse than expected. If it comes in lower, that would be better than expected. The expectation is to tick just slightly higher from the last week that this was announced. And so if we look at the volatility tool, what we can do is pick a currency pairing, anything with the USD. We can pick a time frame after the past announcements. These candles are USD movements after the initial jobless claims announcements over the past weeks and months. What direction did the Euro USD move? And you can pick the time frame as little as 5 minutes after the announcements. If you're trying to take a quick 5-minute trade, up to 4 hours after the announcements. How did the movements go? We'll start with 4 hours, and then we can look at all events, or we can qualify how the announcement came in. So if this comes in above forecast, which is worse than expected, right? More initial jobless claims than expected. If this comes in higher than expected, it's happened twice in the recent months, and each time that it happened, the USD strengthened and pulled the euro down. Okay, so why would that be? It shows weakness in the US economy potentially. Whatever the case may be, if this came in worse than expected with higher jobless claims than expected, we had a downward movement, average range movement of nearly 36 pips. Okay, what if this came in below forecast? The opposite. 2/3 of the time, the euro went up against the USD if this came in below forecast. Okay, so this shows you the data. It's not 100%. If you had bought each time on this, you wouldn't have won 100%. But you can see in the past 2/3 of the time, there seems to be a statistical advantage to buy if you can get the timing right when this comes in below forecast, to buy on the Euro USD. And the opposite, if this came in above forecast, there's a statistical advantage to sell. Okay, now, sure, it was up the majority of the time after 4 hours, near 50 pip range movement. What about in the first 5 minutes? Look at that, 2/3 of the time it went down. So in the first 5 minutes, there was a false move the majority of the time compared to where it ended up after 4 hours. 2/3 of the time down after 4 hours, 2/3 of the time up. Okay, we could carry that out and say, well, what about after 1 hour? Okay, by 1 hour, 2/3 were up now. So the true movement occurred, and only 3 were down. After 4 hours, still up 2/3 of the time. So in that first 5 minutes, you get a big move down, about 12 pip range movement on average. And by the time 4 hours passed, 2/3 of them were up, average range movement near 50 pips. Okay, so you can analyze these announcements and see what would be your trading plan based on how these numbers come in. And with this announcement, initial jobless claims, it seems that it's somewhat predictive of what direction this will go in the first 5 minutes, and then differently after 4 hours based on how this announcement comes in. The initial move was the direction you might expect, meaning worse than expected data, the USD initially weakened, And then after the first 5 minutes, it's actually strengthened, and the opposite the other way. So you can take a look at how these movements occurred in the past and have a statistical breakdown percentage-wise of where would it have gone had you traded on those last ones. Okay, so very strong indication of direction of movement based on how the numbers come in. And you can work out the timing of what did it do in the first 5 minutes, but where did it end up after an hour or 4 hours? Okay, let's look at some others. Maybe we jump to tomorrow because we've got some major announcements out of the US, as I alluded to. We could look at other countries, but on the day that the non-farm payroll announcement comes out of the US, traders, even with these announcements that are high level out of other countries, the response is muted many times because there's a wait and see to see what this big data will be out of the US. And then you tend to see the bigger moves. So I think we'll focus on these announcements out of the US. If we look at non-farm payrolls, that's the big one. Look at last month, the jobs were only 12,000 jobs created. That is anemic for the US. And it's even worse than that because 40,000 of those jobs approximately were government created jobs. Private sector actually lost about 30,000 jobs. There was not only low creation of jobs, there was actually a loss of manufacturing jobs, for example, 20, 30,000 manufacturing jobs lost. The only reason this even has a positive number was government hiring, which doesn't gain confidence in the private sector and the free economy and the actual market in the US. So the jobs numbers were very disappointing last time, and the market responded to that. Now, they're expecting a tick back up here, 200,000 jobs created. If that happens, could see a strong effect, especially if it overperforms that. If it comes in higher than 200,000, but if it misses again and comes in well below 200,000, again, you could see a large reaction. Now, understand the US economy, a lot of times you have temporary hiring during the holiday season. So from now until the end of the year, there are a lot of companies hire part-time or short-term hires, and so that can bloat the jobs numbers coming into this announcement. And so we'll see what happens. It's possible this could overperform, and it could be largely due to short-term hiring, but we'll see what these numbers are that come in. But if we look at the last reactions to this announcement, okay, we'll stick on Euro USD. We'll again follow the same pattern. 4 hours after these events, if this came in below forecast like it did last time, okay, we see 50-50 movement. 2 up, 2 down. If this comes in above forecast, look at the reaction. USD strengthens rapidly. Okay, 2/3 of the time dropping, and the ones that went up, they barely went up. You wouldn't need a stop loss very far away to stay with all of these movements. You see, they didn't go up past here, except for one. So really, you might have won even on these two that after 4 hours went up. It's likely eventually they dropped also. So you look like you'd had a great win on 2/3 of these and potentially more. There was only one of them really went up significant, and the rest stayed flat or dropped significantly. And we're talking about dropping near 90 pips on 3 of these. Okay, average range movement 70 pips. So huge advantage to sell Euro USD if these numbers come in above forecast. So what we see here is a bigger reaction to better than expected numbers and a muted reaction when these numbers came in below expectation. Okay, it was 50-50. So what I would be looking to do on this based on this data would be if the numbers come in bad, below that 200,000, I'll probably sit it out. The results were 50-50 when it came in below forecast in the past year or so. If this comes in above forecast, I would be looking for the USD to strengthen and strengthen quite rapidly. Okay, why? Because if this data shows strong job creation, you might see the expectation that, hey, they just can't cut interest rates again this year. That would be the thinking. Because if the economy is strong and hiring really strong, The fear is if they lower interest rates, inflation could come back. And so if this data comes in better than expected, what we've seen is USD rapidly strengthening in the 4 hours after, okay? Talking near 90 pips on 3 of these movements. And in the first 5 minutes, what do we see? 2 of them went up. The ones that went down less than, say, 50 pips, all of them. So in the first 5 minutes, 40 to 50 pips dropping, and you could get a trade-off quicker than 5 minutes. And after 4 hours, we're talking 70 pip range movement, and some of them 90 pips. So what you're looking at is what kind of entry point can I get in these first 5 or 15 minutes to go in the direction that the data shows statistically you might feel it should move. Okay, and you're not going to win every time with this, but the whole point is to have trading that's based on past data and to act in a more of a robotic way based on entry points and expected movement from the past information. And so the larger the announcement is viewed to be in terms of impact, the bigger these movements tend to be. Average hourly earnings, similar to the non-farm payroll reaction. Okay, if this is above forecast, USD strengthens rapidly. This is even a larger percent of the time, 75% of the time. So there could be a doubling effect on this. You see, if this comes in below forecast, up. The same as the jobs data. So if the average hourly earnings are better than expected, you expect a rise. If they're worse than expected, if they're below expectation, you expect the USD to weaken, which would have the euro rise. If they're better than expected, you'd expect the USD to strengthen and drop based on the past data. The same was true, the same relationship with the non-farm payroll data. So since these come in at the exact same time, if both of these are worse than expected, then you have a double reason for the USD to weaken. If both of these are better than expected, then you have a double reason for the USD to strengthen. If one comes in better than expected and one is worse than expected, maybe that's where you sit it out. Okay, so you can watch, and these will come in at the exact same time, within a few seconds of each other. And if you see red, that means worse than expected, then you know the past data shows the USD weakens in that case. And if these come in green, higher than expected, then you right away know the data shows that the USD should strengthen and pull the euro down based on the past data. Then you start to look for an entry point. And you know the expected range movement based on what we looked at here. So you can have a trading plan ready to go to watch this data come in. And in the first 5 minutes, if you get an entry point you like, maybe a spike in the opposite direction, then you expect it to go based on the data. You might take that entry point, put an appropriate stop loss, and take profit based on the range movement that we've seen from the past announcements. Okay, very simple strategy to carry out if you're able to watch the numbers as they come in. Okay, and you manage the risk accordingly in the order window with stop loss set, trade size, all calculated now in advance. Okay, you can know already what your plan will be, and you can look at these announcements for the week, for that matter, and know what you plan to do in advance. These Canadian announcements a lot of times get good movements that are predictable as well. This is employment change in Canada. And if this comes in better than expected on the USD Canadian, okay, 50-50, but look what happens if it comes in worse than expected, below forecast. Look at the USD climb against the Canadian, 80% of the time. Average range movement over 81 pips. Only once did this go down, when these numbers come in below forecast. So bad news for the Canadian on this employment change. USD rapidly climbs the majority of the time against the Canadian dollar, going over 80 pip range movement. And if we go 5 minutes, it's only gone 30 pip range movements with another 50 to go. 2 of them were down. The highest one went 47, the others were 10 pips, 12 pips. And after 4 hours, look at the movements. Okay, high predictability with this announcement if this comes in below forecast. If it comes in above forecast, I'd probably sit it out. It's 50-50. I wouldn't be interested based on this data to feel like I have an advantage. Okay, so again, for each announcement, each time frame when the announcements come in, and some of these are at the same time, you could have windows open for both, ready to trade. Watch how the numbers come in and place your trades accordingly. Okay, very simple to set up in advance. Any questions, comments before we move on to a different strategy? Okay, great. So let's take a look then at another tool that is fundamental based, meaning news based. And we can find that also in the discovery section. We can go to the market buzz. And, you know, I took a trade on Amazon yesterday. We can look at my open positions in a second, but it's an Amazon trade. And it didn't move a lot yesterday. But what we see if we look at the stock category in the market buzz, each circle represents an instrument that's tradable with AvaTrade. And the bigger the circle, the more buzz we find online about it. The more people are talking about it. And so Amazon, we took a look at yesterday quickly to look at the technical analysis of the trend analysis. And we see they're recommending or expecting a potential 10% rise in Amazon. And, you know, given that it's the holiday season and, you know, there's a ton of online orders going during the Christmas season and such between now and the end of the year. Amazon being one of the biggest companies for online orders and deliveries, it makes sense, this prediction that the price may rise, that there'd be a lot of demand for their services and their products. And so if we take a look at some of the articles, you might find that the articles are positive as well. And so you can scroll down, read articles for the past hours. You know, here's one about why Amazon will be a major beneficiary of AI technology. Okay, if you want to read about how is AI technology helping Amazon to be more efficient, and I think it's probably pretty obvious. If you've paid attention to what they're doing with drone delivery, for example, imagine the cost savings for Amazon when they don't have to pay someone to drive that big brown truck around to hand deliver house to house. Now they have drones that fly without much human intervention at all, and literally fly the package and drop it on the front steps or in the front yard of the person who delivered it and fly away back to pick up more orders. The cost savings with this type of AI technology, and also within their buildings as well, more and more becoming automated and AI driven. You can imagine the effect that could have on a company like Amazon and the savings they could have, the profit per share for their shareholders, et cetera, that they may be able to bring as AI is incorporated more and more. So you can read an article like this right here, click story continues, and you can see the positive buzz regarding Amazon and AI technology and how it could quickly help their bottom line. Okay, so you find information, fundamental news, very quickly here, and then you can match that up with the technical analysis as well, which is an expectation that Amazon will rise. And so you have multiple fundamental news reasons, holiday season, increased demand for Amazon's services and products, AI technology, maybe assisting Amazon with a big article about that, maybe creating positive buzz. Also, you have the technical signal saying maybe it'll rise 10%. And with these tools, then you could put together the idea that, okay, when the US market opens today, maybe I'll have a look. And if I like the entry point for Amazon, if I like how it sets up from a technical analysis standpoint, with the signal helping you with that technical analysis, here's the support level that as long as it didn't break below the support level, they're saying you should buy. And as long as it hasn't reached these resistance levels, then maybe it's a move you'd want to do if you like the entry point. Okay, so you put together what you feel the fundamental news is, right now from the most recent articles paired with the technical analysis and make an informed decision on what you might do with that trade. And we can do that with any instrument that we offer, any category of instruments. We can switch to the currency pairings, the commodities, the cryptocurrencies, etc. Okay, and maybe you're interested in Apple. You know, it's a major product this time of year, given that people are buying gifts like crazy. And if you scroll down, I saw a number of positive articles here regarding Apple. There was one about sales in India, I believe, breaking records. Here, Apple's iPhone sales hit 10.7 billion in India, overtakes Samsung for the second year. So outselling Samsung in one of the most populated areas of the world a second time in a row. So that's good news for Apple. And that news just came out 5 hours ago, okay, in this article. So you can click and read that whole article and then combine that with the trend analysis that this one also predicts a rise, this one 5% rise prediction. So you can start to be informed about where you might take profit, where your stop loss might be below the pivot line here, and what direction you might want to trade based on the fundamental news. And if it all pairs together, then there's another move you might want to do. Okay, so very simple tools to utilize and follow, and you can put together that trading plan quite easily. Let me pause for a moment. Any questions, comments before we move on to maybe one of the charts to look at? Okay, great. So, you know, if we decided that a certain instrument based on the fundamental news we looked at was something that we wanted to make a move on, then we can kind of start to pull up different instruments and see what we think is happening. And so if we wanted to look at something like the Euro USD, and here's the technical signal for the Euro USD over here. And we see it's a buy signal, and the expectation is that this will continue to rise until it reaches 105.55 or even higher, 105.75. That's the take profit zone on the signal. It's above the pivot line down here, so your stop loss, if you were buying on this, might be down below the pivot line. There's going to be volatility on this because of the large announcements coming today and tomorrow, but the expectation is a rise here in the end. Okay, so if we wanted to bring up the Euro USD chart, we can take a look at, let's go maybe a little larger candles. If we look at the 4-hour well, let's get the right chart here. Euro USD. And let's go to maybe one day candles. Chart's not updating for me. So let's do it from here. I'm just going to refresh my platform, having a little technical difficulty sometimes with the Wi-Fi connection where I'm operating from. Okay, now we've got the Euro USD chart where we want it. And what we see on the 1-hour candles is it reached a resistance level here and pulled back. Okay, we can see this here, technically speaking, resistance down, resistance down, resistance, pushed it down again, and again, and again. The signal says that this will rise back up towards these resistance levels up here. Okay, so if we go to larger candles, here's our 4-hour candles, and we get rid of these down here, and then we start to pick out where are the resistance levels. We've got resistance here, where it hit and dropped hit and dropped, and a third time hit and dropped. We've got this one here, which is based on this pressure point where it hit and pushed down. So we've got two spots mimicking the signal, and the prediction is that this could come back up to these resistance levels up here. That's the technical signal. We have to think about the fundamentals. The fundamentals right now are that there are announcements that we don't know what the results are yet. Okay, in just a couple hours time, we'll have an announcement on jobs information out of the US, actually jobless information, initial jobless claims, which could create a movement either way here. And we also tomorrow then have the non-farm payroll. So if you were going to go with this prediction to climb, but you're uncertain about the timing of it, and you don't want to get caught where you put a stop loss and it shoots down before it shoots up, then you could start to use a tool like AvaProtect. So if you wanted to buy with that signal, but you're afraid of the volatility right now, then you could start to say, well, if I protect this for a couple days through those announcements, 2 days protection protects me through 2 trading days, which would be from today to tomorrow and then from Friday to Monday. So this would protect me all the way to Monday. I could do a trade size that I think is appropriate for the amount I want to spend. One lot, which is a pretty large trade, pretty large profit potential, only costs me about 400, which is less than 1% of my balance. So you can start to calculate what size trade you could take, 1.2 lots maybe, 1.5 or 1.4, and I'm still less than 1% of my balance cost for the protection. So if I expect that there'll be bad data out of the US on the jobs again, that they'll miss the mark, then I can anticipate and make a preemptive trade, and it's with the signal that was there. So in the short term, the signal is saying buy, and if you anticipate that you think again the data will be weak out of the US, then maybe you think the euro has fundamental reason that it could be spurred to climb, but I'm risking very little, less than 1% of my balance, can even go a little bit larger trade, and I'm still just under 1% of my balance, okay? Now let's look at profit potential. Where do I think this could rise to? If I say, okay, if there is worse than expected jobs data, this could easily go to this resistance level here without having to break it. I would get, let's say, 105.85 to the take profit. What's my profit potential? Okay, double almost, or a bit better than what the cost of the protection is. Okay, and I can start to look at larger candles, because this really would be pretty big news if the jobs data came in worse than expected. And I could start to look at, in the longer term, where's a more major resistance level, and that's up here on the one-day candles where there was support, and then a big breakthrough here in the one-day candles. So if this comes up, it could track towards, by Monday, remember this protection takes us to Monday, could track towards this resistance level here with the right fundamental news push, and the big news release tomorrow. So I can hold this position without having to worry about my stop loss being hit in the direction of the technical signal, and in the direction that maybe some might anticipate bad jobs data could run this, and I don't have to worry about losing any more than less than 1% of my balance. But my profit potential up to this resistance level, 106.75, let's say, is just before that resistance. This is where that AvaProtect tool really could pay off, because now my profit potential is over $2,000, nearly 4 times what my cost is for the protection. So if I'm right once on this out of 3 tries on a move like this, I'm in overall profit. So then I make a move protected in the direction of the fundamental news potentially, and in the direction of the technical signal. Okay, now we just need to see how does this jobs information come in tomorrow, today and tomorrow. And if it goes worse than expected out of the US, you could easily see this position become quite the profit. If it comes in better than expected, the jobs data today and tomorrow out of the US, we're only risking 1%. And maybe before that data comes in, the short-term signal which said to buy, you could already take a short-term profit, maybe do a partial close on the short-term move. Okay, and if you want to do a partial close, it's very simple. You go to your open trades, you go to the X, and you can close any portion of the trade you want. You can change the lot size and close the amount you want. Now, this is the Amazon position. This is the Euro trade. And you can close any portion of that trade that you want. So if this was in profit, it's not yet, but I could close half of it. I could close whatever portion lot size that I want, and it'll take that percent of the profit. So I could take advantage of that short-term signal for part of it and keep the rest protected by AvaProtect still. Okay, just some ideas with risk management along with those trades. All right, everybody, thank you for joining. This is where we'll call it quits today. Good luck if you're trading on any of those announcements today and tomorrow. I expect there's huge potential with those US announcements. So hopefully you have some time to take a look at those and maybe employ some of the strategy ideas we went over from the economic calendar, and maybe have a look at some of these stocks and other instruments using the market buzz to see if you get some ideas that look good to you from those articles that you can read. All right, everybody, thanks for joining and good luck with your trading. Bye for now.